following is an updated and technical analysis on the U.S. 30-year Treasury note here off the daily interval. We'll also be covering the 10-year U.S. Treasury 10-year yield, 5-year yield, Nasdaq 100, S&P 500 futures, Russell 2000, as well as deep diving into some of the 60-minute intervals within the Nasdaq, Russell 2000, and additionally some notable significance that I've seen in the SPY, the largest component to the S&P 500. And wow, what a day today where we saw an unexpected positive uptick within industrial production, along with a larger than anticipated increase in housing starts, which led to a substantial boost within the Atlanta Fed's Q3 GDP now forecast, which projects a now remarkable compared to yesterday 5.8% growth, whereas we had the Fed minutes revealed with a all-out surprising shift and a whole different all-out hawkish stance as concerns about resurging inflation completely took the center stage. Additionally, had President Biden tackle the student loan debt issuance by eliminating over $116 billion in debt forgiveness, potentially necessitating Fed Chair Jerome Powell to counterbalance with additional strategic interest rate hikes. And then we have the geopolitical structure in the cost of supporting Ukraine's interest, evident through some of the lavish lifestyles and costly assets, where we have a proxy war to pay for that ain't cheap, keeping some of the Ukrainian henchmen in luxury mansions and sports cars. What a heck of a day today, where we had the Treasury yields demonstrating upward movement throughout the day with more pronounced shifts on the longer end of the yield curve. We had the Japanese yen in an all-out decline and yields surpassing their intended benchmarks, indicating the potential for Bank of Japan to intervene within the near future, potentially within hours, days, or within the upcoming weeks here. And here we are, starting off the daily interval with the 30-year Treasury note, where I have a significant price zone around this 1 Fibs retracement, call it the 4.3 yield price support, price resistance here, and that has been completely taken out here, where we had a completely solid, clean candle, green candle close right up above that key inflection point, where you have the moving average convergence just churning to the upside here, just taking off now, completely taking that level out, where I have additionally a potential flagging pattern, where it is a bullish bull flag continuation pattern, where you have your additional flagpole followed by your flag, and then additionally you have the continuance of a flagpole honing in up above, where we could really start to take off here on an all-out sell-off here on the long end of the curve, taking you into the U.S. 10-year. I had mentioned how critical this juncture was off the 4.208 price, call it minor resistance level, and we have officially closed above and taken that key inflection point out with a solid back test and or close right up above that key inflection point, where bear traders, short sellers are just salivating up the mouth now here off this, shorting off some of the long end and belly of the curve there, where we'll hone in on to the 5-year, and we are at a key pivotal inflection point off of major resistance off the 4.45 price resistance, call it the top of the primary trending range, and this is a very monumental key inflection point, call it multi-year price resistance, and we are knocking on the door of that key inflection point, call it 4.45 price resistance as of now. So long traders, bull traders, bond traders need to step in aggressively right now, right here, to revert a breakout of this yield in this 5-year note. Additionally, where short sellers, bear traders, they want to see a solid daily candle close right up above this key inflection point, honing in for more carnage within the bond markets there. So again, just a key level to watch, that must be respected by long traders and or bull traders really at all costs there. Taking you out to the Nasdaq 100 futures based upon the CME index here off the daily interval, we have officially had a clean, solid candle close below that key inflection point. Would have been nicer to have a complete, again, a sell-off right below that 14,871.48 price support that I had discussed yesterday. But again, that is a decent, put it on a scale of 6 to 7 out of 10 rating for a sell signal, whereas I would have loved to see a solid, clean daily candle close right below that dual line of support there for a confirmed 9 or 10 out of 10 price signal, sell signal right off that key inflection point, call it off the primary uptrend line there, and we have officially taken that level out. Looked like we had a reactionary high and completely sold off right into the close there, and we'll be retesting, if not testing tomorrow, the 14,871.48 price support, where you could have an additional the back test scenario if bull traders, long traders need to step in pretty aggressively right amongst that key inflection point, really at all costs, to have that back test scenario where an issuance, beautiful objective short trade entry off the dual resistance, call it off the bottom of this primary uptrend line, and the 15,130.26 price resistance, would just a strong major price support resistance right there. And that would, again, just usher in a bear traders and or short sellers for a nice, clean, objective short trade entry for an additional move to the downside and re-challenging the 618 pips retracement, call it 14, 439, 97 price resistance. This would make the perfect backtest scenario play out there. Taking you into the US Tech 100 futures here off the daily interval, and we have a significant price support that has been breached off the 618 fibs retracement, called the 14, 938.30 price support there, and that has been taken out with conviction right off that key inflection point off the close there, and we are trading slightly below it, where I've added this new, call it minor price support, 14, 677.70 price support there, and long traders, bull traders will be aggressively potentially looking into that key inflection point. I call it minor multi-year price support, not too crazy about it in comparison to the 618 fibs retracement or some of these key additional levels down below, but that is a renewed minor price support level where bull traders and or long traders and or active day traders would need to step in to avert further damage being constructed amongst some of these key technical momentum indicators that are just rolling right over and below the zero line thresholds, where you have the stochastics 1033 just crashing into a downward abyss with no support end in sight there. Deep diving into the US S&P 500 futures here off the daily interval, where I had continued to hype and harp this primary parabolic uptrend line off the September 2022 reactionary lows. And again, primary parabolic uptrend lines usually end in a wave of selling and a disaster when you have a ton of longs trapped up in this space, where you could have only bull traders, long traders, only with the assumption that the price could only continue to the upside, just leveraging behind the eyeballs there, and then ultimately having that completely trapping in those longs, putting a clean daily candle, solid candle close below that key inflection point, and thus far, right off the price, 45.79 price resistance thus far has been good for a 3.85% crash, and we are just completely completely took out the 40 price support there, and it has just been met with a wave of selling with a complete just violent candle close below, a bunch of stops that just went off. And again, that was a key inflection point to watch, where we actually had a reactionary high back test off that key inflection point. And again, I had just mentioned how pivotal that key inflection point was, whereas we have the next target here at the 43.29.90 price support, correlating with the 618 fibs retracement for an additional bounce and or again, more active and or swing traders for a move to the upside that needs to be defended heavily, really at all costs, trading within no man's land here. Taking to the US 2000 Russell futures, and I had mentioned how pivotal, how big of a key inflection point the 1899.30 price support was, call it a multi-year of reaction through reactionary lows and highs right across the board throughout the entire spectrum, and that was going to be met with a wave of big selling if breached. And talk about the stops, margin calls, and all the algorithms machines that completely sold off here. And that was a big candle close right off that key inflection point, whereas we had a nice clean short trade setup to the downside based upon this concealed hidden primary downtrend line, put in a nice clean divergent high with negative and bearish divergences constructed amongst all three technical momentum indicators, and that was just met with a wave of big selling there. Initially just taking off that key inflection point, the entire trade right there was good for a 6.2% drop, honing in to, again, this minor primary uptrend line that needs to be defended heavily, correlated with the 236 fibs retracement and primary minor uptrend line support there. That's where bull traders and or long traders need to step in to defend that key inflection point really at all cost, to avert additional bigger wave of selling. And then additionally, you have the 18.19.10 price support, and that is a big price support there. Again, I will be continuing to harp up that key inflection point with additional just a plethora of reactionary highs, reactionary lows, really across the spectrum of that price support zone there. And that needs to be defended pretty heavily. If not, then I would only suspect a much stronger wave of selling, a waterfall type of event, if we completely break and landslide right through that key inflection point. Whereas you have the oscillator and the moving average convergence starting to roll over into below their zero line thresholds as well. And then the stochastics 1033 just completely crashing down below any key support, price support, or among the technical momentum indicator dimensions. And that is just a really bad sign. And do not underestimate how oversold a crash of this magnitude could appear. Deep diving into the US Tech 100 futures 60-minute interval, I've added this new primary. I've mentioned it yesterday briefly. Primary reactionary high and low channel here, and I believe there's enough key inflection points to help validate this price support level. Just a multiple reactionary lows, reactionary highs to help strengthen the validity of that key inflection point. It looks like we're starting to bounce right off a bit, where you could additionally set some stops below, taking an aggressive whipsaw-like reaction right back into resistance up that 14,872.40 price resistance now, so which was once support, now resistance. Technical momentum indicators just plunging, burning out all of those positive divergences that we had, snapping the primary uptrend line that we had just yesterday. And again, I had mentioned it would become with a strong wave of selling, burning off these positive and/or bullish potential divergences. And you have the, again, stochastic 1033 just crashing to the downside into a deep abyss. This, I believe, is your last, the bulls and/or long traders' last strength of hope here off this primary, which you have a primary trading channel at all cost here, and that is going to be a big key inflection point to watch. Where they suspect a potential counter trend, they want a snapback counter trend rally if we have some Bank of Japan intervention occur, and again, just a key inflection point to watch and to hone in on. Whereas short sellers, bear traders, they want to see a complete breakdown below this primary channel, ultimately challenging the 14,790.50 price support there. And I've added some key inflection points, additional minor price support levels, minor 60-minute price support levels that are not built with a whole ton of strength there. I've only added some of these key additional targets for any active and/or day traders in case we start flash crashing them all and yields start blowing off, or the bond market just starts imploding on both the short end and the long end and the belly of the curve there. And that would be some key inflection points to watch for additional gains or bounces. But again, the long trade here is only going to be alive if and when any bull traders and/or long traders step in pretty aggressively here. Setting some tight stops below, and then additionally defending that key inflection point. Whereas you could have a whipsaw-like reaction right below that trading channel, and then ultimately popping right back up above for a nice clean bear trap if and when we come across that key inflection point. Taking you to the US small cap 2000 futures here. Again, we had that positive divergence yesterday, just completely burned through. And again, just as I had mentioned yesterday, would be met with a wave of selling if burned off. And again, just moving average convergence in the oscillator, burning out into an abyss, burning off that positive divergence that we had, where we had a breakdown sell signal off this key primary reactionary low uptrend line, back tested it really to the button there, and was rejected impulsively right off that key inflection point, and just completely started crashing, never looked back there. Where again, you'll zoom in here, the 618 fibs retracement had a key inflection point where you had a perfect additional back test really to the button there, especially for any active and/or day traders, and that was good for a nice clean, it was called 0.7% scalp there, day scalp. And we are just trading right amongst this 1873.44, call it hourly price support there, where again, bull traders, long traders need to step in right here at all costs to avert further damage amongst some of the key inflection points, where I have additionally 1856.61 price support correlating with the 786 fibs retracement, 1837.48 price support, and then ultimately the 1815.39 hourly support, which correlates with the 1819.10 daily price support there. So just the bull case is just really thinning out. Again, I had mentioned it looked a little grim yesterday, but this is just a major inflection points, additional inflection points to watch and respect. Taking you out to the SPY, the largest component of the S&P 500, and I believe this to be a monumental key inflection point here off the hourly, where we have this primary reactionary uptrend line off the March lows, and this is going to be really a key inflection point that all traders, algorithms, computers, machines will continuously hone in on to watch here, correlated with the 438.01 daily price support there. I'll call it a dual line of inflection points, correlating triple line of inflection points with the 786 fibs retracement. And this is going to be a very big turning point, a critical inflection point, really at all costs, where bull traders, long traders need to step in aggressively to avert a potential secondary sell signal within the SPY here. And that would be an ugly backtest and potential big wave of selling, a much larger wave of selling down to the 431.30 price support there, correlating with the 1 fibs retracement. And that is going to be just a monumental key inflection point to watch, where the risk reward ratio would lie heavily to the long side for some of these additional targets to be hit up, regaining back up to the 618 fibs retracement, swing trading multiple days and or weeks on end to reach some of these key inflection points, up to the 50% fibs retracement, correlated with the primary minor downtrend line for 1.7% in gains, which again, right here off the July reactionary highs. And that is going to be a key inflection point to watch for any short sellers and or bear traders to hone in on. and would need to defend this key inflection point to keep the bear case alive, additionally re-challenging this primary reactionary uptrend line. And what will be more significant out of all the hourly charts, pure haze in the Nasdaq, pure haze in the Russell 2000, but this is going to be your biggest key inflection point, whereas you could have just off the skin of its teeth, barely selling off into, which would put in a potential divergent low here, big divergent low as well, huge divergent low, and that would gear up for any bull traders and increase the odds for a bounce here. Positive, which would correlate with if we get that bounce right off that primary uptrend line, you will have additional positive and bullish divergences amongst all three technical momentum indicators for an additional high probability bounce to the upside if and when we get there. And again, short sellers want to see this completely go, this triple line of inflection point, and then ultimately have these divergences just completely burned out in a hellscape, big crash move to the downside.